Hello and welcome to the Bitcoin Bros podcast, featuring two Bitcoin brothers who are going to chat Bitcoin, life, and everything in between. I'm the big bro Gaz, and I know everything.
I'm the little bro Tom who doesn't know everything, but what I do know is this is not financial advice. However, buy Bitcoin or have fun staying poor. Anyway, welcome to season 2 of the Bitcoin Bros.
Yeah,
So
we call it season two just because we had a massive, massive break. So is this still season one? Who knows? But
that's it, isn't it? Yeah, bits happened in between February 22 and May 23. So yeah, what I can say, I can testify for my life's changed quite a bit. I've put on about 8 kg, and I've got another son. And your life, I don't even know who I'm looking at, to be honest. Where the guy back in February 22 was going, I'm going to Sweden, screw this world. And now this man he's got a house. He's setting up a mini farm. I think he spends his life doing chicken coops. And I can't believe what we were discussing before we went on air, but a wedding. A wedding! Who would have ever thought it?
and a baby.
And a baby, of course, yeah. You've changed it. And he's got a big beard as well.
Yeah, I had a bigger one coming back from Sweden
You
after
did, to be
those
fair.
lockdowns, but yeah, Jesus Christ, yeah. So don't know, and partly that was all those kind of big life events. Kind of not all of them went smoothly, did they? So that was partly why this good old pod got pushed to the back. But yeah,
You're going,
the
you're
good
going,
thing is though it means we feel fully refreshed. And I know, but back I think when we were doing it, I was still going, are these adding value? I don't really know. Is it repeating stuff? And but yeah, but the year and a bit that we haven't done it, like, the feedback has been great. People keep dipping in to this pod and going, "Oh, why aren't you doing it anymore?" And obviously, I do a different pod, the four Bs, but it's a completely different audience. For that audience, you need to be pretty clued up on Bitcoin, and it's very much a weekly show where it's just the news of the week. But I think these episodes are just, I mean, they hit harder because it's big topics in Bitcoin, and I think it's genuinely questions that people have about Bitcoin, and we tend to just focus on one or two of them each week. So you can just listen to it whenever you want. So you can drop into one of our pods a year, 2 years, 10 years later, and it can still be relevant. Whereas a lot of other pods are, well, that news of the week isn't relevant 10 years
Mhm.
later. A million things have happened, so it's all just it's history. So yeah, so we're back, and let's
Yeah,
see if people still like it or they're just being nice to us.
well, yeah, like you say, we've had some good feedback, and it is good to get back on the road. Um, just so you know, we've got a few good pods lined up. We've got, I think, 5 weeks agendas sorted, and it's some big topics. We are going to change the style slightly this week. One of the other big things that's happened in my life is I've completed my MBA, and I'm now in the middle of doing a dissertation. And I've got some good questions that have come from some academic work that I've done, which does sort of lead into the FOMO type thing that we have addressed on numerous occasions on some early pods. And we know that the FOMO, not FOMO, the FUD that's out there about saying certain things about discrediting Bitcoin. So anyway, I've been doing quite a bit of work and reading around for a literature review, and I've come up against a fair bit of opposition, especially with my supervisor, a big economist, who first things he said when she saw my proposal is, "Bitcoin's not money. Don't know what you're doing this for." Not a great start. So I've I had to do a bit of charming to try and get around this. So anyway, the first paper that I've got in front of me, I just want to read out one of the lines. We find empirical evidence that the fundamental price of Bitcoin is zero. Okay, which is quite an interesting statement just to open with. And what, like, empirical evidence? So that means they've got proof that it's going to be zero. But then when I read through it, it's based on price, it's based on volatility. And of course, if you think about it in the sense of you can lose 60, 70% of an asset value, then that does as a relatively stable conclusion. The conclusion actually says because of bubbles and also um, fact that the price is not substantial, the value equals zero, and they've done some weird stat stuff on it. But so first of all, what do you think to that?
I think just about every smart person I know uh, would openly admit they don't know what the price of Bitcoin should be. So if these guys have empirical evidence that it is definitely a thing, which is zero, then they should be heavily in the market shorting Bitcoin, saying it's going to go to zero and become billionaires. If so, the first question I would ask all the authors would be, are you shorting Bitcoin now? Because you have, because when you say empirical, it means it is categorically correct. It cannot be wrong. This isn't just, investing advice going, oh, look, the momentum for this company or this asset looks positive. Markets are growing, customers are growing. So therefore, we would predict the price would go up, or the opposite. The market is shrinking, customers is going down. So the share price or the asset price should be declining. They are indicators. It is, it's an investment level kind of prediction. And that is what they are. They are predictions, because predictions can be right or wrong. Something huge could change in the market, that all that evidence and all that data that suggested one thing can suddenly be outdone because something massive happens and the entire market swings either up or down when you weren't expecting it. But these guys say it's empirical. Now, empirical means, like I said, it's like gravity. It's like oxygen that we need to breathe. These things are factual. They are 100% true. So their 100% truths that Bitcoin's going to zero would mean I would be remortgaging my house and I'd be putting it all in on shorting Bitcoin going to zero. I can guarantee you every single one of the people that has contributed to this paper is not short Bitcoin and is definitely not all in on short Bitcoin. They're just doing it from a theory point of view, and they've misused the word empirical just to try and sound like their paper has weight and has authority, that they really know what they're talking about, where in reality, they very likely have extremely limited knowledge of Bitcoin, and probably haven't even gone to the level of reading something like the Bitcoin Standard. Never mind going deeper than that.
Yeah, and yeah, I think you're right, and I think interesting to say, is the price to go to zero, or is a Bitcoin worth zero? I think that's yeah, it's similar but slightly different still, isn't it? Because I suppose the value is the price, isn't it? But anyway, one of the things they do mention about it is they say about the digital mining process. So basically replicates production costs of precious metal mining. I don't think it is. Is that on point? Like I'm not convinced, because the price of mining is. I just don't think it is the same, because let's say the price of Bitcoin goes up to 100 grand, then or if it goes down to £10, then the cost to mine it per energy to get that mine across is the same energy. That's the same constant, but the reward is massively different. So therefore, but if I dig a bit of gold up, it's technically the same energy and cost gone into that, unless you argue that gold's got a variable asset cost or price as well, which I don't think it does. Not to the extreme of what the Bitcoin volatility is at the minute of price between 2020 and 2025. I imagine it's very different. And the other thing is, it talks about Bitcoin has more convenient convertibility and low transactional costs, which again, kind of, for me, it contradicts the fact of the mining process being the same as gold. But anyway, the one of the things I wanted to talk to you about is the view of the academics on what money is, which I've never really thought about. What is money? How do you define money? And the way they've defined it is it's got to have a similar, got to have number of functions, such as unit of account, means of payment, and store of value. And what they do is that the empirical value of zero is based upon the fact it doesn't fulfill those three criteria. So unit of account is an interesting one. So basically volatility undermines that. So you can't have a unit of account if it's fluctuating so dramatically. Means of a payment, well, it is. But they say about means of payment, like I could pay you, half a Bitcoin to do my gardening. So that is a transactional cost if you accept it. So I think one of the interesting things that you can consider in this one is if you think of some of the third world countries, and again, is when I went on my year out, we had a lot of countries that would have their own currency. But you take that currency, so that currency is a unit of account, it is a means of sort of transaction and payment, and it has a store of value. However, you take it out of that country, you can't buy any goods in like America with it, for instance. Then it's just worthless. So then that money changes out of that category. It doesn't become money. So my point being, the US dollar is widely accepted in pretty much every country I went to, other than Britain. I don't think it's accepted there. So its domain is massive, whereas like Guatemala or Tunisia or something, it's quite small. So it's only in that domain that it's worth anything. So which where I argue the point that Bitcoin does have value. It is a means of payment because you can do it online. It's got a unit of account because it's worth something. And it's obviously a store of value because you can transact it back into fiat. But it's just its domain small. So it's not widely accepted, but it is accepted in a small area, isn't it? Because if you can do it in El Salvador and you can do it online, it clearly is money, isn't it?
Yeah. Well, just based on what you've said, obviously I haven't read this paper, but the way that they've defined money there is very convenient because the way they've defined what money is to them is what the current established money is. So based on that criteria, they will never spot up and coming money, ever, regardless of which currency it is, because it will fail on those three categories. Because any new form of money is always going to be volatile. So it's going to be hard to price things in. It's going to be hard to transact in that currency because by definition, it's the new one. So obviously everyone's using the current money now. And what was the third thing?
What would be said so far? Sorry, unit of account, value, and transaction.
No, it was, yeah, unit of count, being able to transact in it for payments, and then what, just the overall value of the thing.
Yeah, just a store of, yeah.
Store of value, yeah. So yeah, so you could so of course, like you could argue that Bitcoin either is or isn't a store of value right now. It's gone up consistently over the last 14 years, but depending on when you bought, you might be down. So you might be upset about that. But obviously, if they compare that to any of the other currencies, they have all gone down by 20-30% in the last couple of years. So
Yeah.
is that much better or worse? So yeah, so on those three criteria, of course, any new form of money will not perform well. However, that isn't the definition of money. That is not the definition of sound money. The definition of sound money is it scarce? Is it easily divisible? Can you transact within it globally? And can you censor it? They are the definition of sound money that Bitcoiners use. And they are the criteria that we will put fiat against it, gold against it, and Bitcoin against it. And then actually there's probably a fifth one, which is history of the money, of being good. Just because it's the one that gold performs better than Bitcoin on. But scarcity, Bitcoin is absolute scarce. If anything, it's deflating as people lose access to keys. Bitcoin's 21 million supply is constantly decreasing as those coins are disappearing. Fiat, we've got the head of the Fed of the US dollar saying the money they have is infinite. They can continue to print indefinitely. So you have an infinite supply there. And with gold, it's about a 2 to 5% increase per year. And that's if you believe the gold miners. But the problem is you can't even believe them because they're incentivized to not increase the value of the supply of gold by too much because you'll flood the market, the price of gold will go down. So even though they have 20% more gold, the value of gold drops by 30%. So net, they might as well have not mined any gold. So no one really knows how much gold there is. But in reality, though, gold supply is also infinite. If you include the universe, there's huge gold asteroids, just 10 times the size of Earth, flying around the sky, solid gold. So gold's all the only thing that is stopping gold from having an infinite supply is some rockets. And if we ever got some and landed some gold, again, it'd be the most worthless exercise ever, because if you did go and capture an asteroid that is solid gold and brought it down to Earth, you would instantly cause the price of gold to go to zero. So your asteroid is now worth zero.
Okay.
Um, so you've got scarcity, you've got divisibility. Fiat is pretty divisible, but down to a penny. Gold is very bad at being divisible. You can't really divide gold down. You have to end up using fiat to back the gold. You have to design little bits of paper to go, this represents a tiny fraction of gold, because you can't be powdering off a bit of a gold block to buy your coffee. Bitcoin is instantly divisible down to a tiny fraction of a cent. So it wins on that. Transact globally. Bitcoin obviously can do that. It's standard. So can fiat. Gold, you cannot. You pretty much have to be in person with gold. But then the big one for us is being being censorship resistant. Obviously, with gold, you can be slightly censorship resistant with that if you've got some at home. But as we know, that can be banned, and it's tough, right? You've got to keep big blocks of gold at home, but you can do it. Fiat is absolutely, if you've got cash, then it can be censorship resistant. Cash is a very good anonymous way of payment. But if you're using anything over a certain amount, you're going to go through the banking system. Every single thing is logged and traced. And if you ever flag up against any sanctions or fraud flags, everything can get blocked, investigated, transactions blocked, your account's frozen. You have to be very, very careful to stay in the financial system with fiat. Whereas with Bitcoin, if you've got a wallet and you've got Bitcoin in it, you can send it to anyone, anywhere, anytime. They can be in Iran, Iraq. It could be a terrorist. It could be a drug dealer. It could be your gran. It could be anyone, right? No one can stop any Bitcoin transaction going through. So it's completely independent of everything, which you can either use, which usually that positive that Bitcoiners see is usually used as a negative for the reasons I kind of went through there, which is, well, that's terrifying that you could get money to drug dealers and to terrorists. But at the moment, they're funded by US dollars, big crates of US dollars. Because like I said at the beginning, because with Bitcoin, at least that transaction's logged on the blockchain, so you can see it. The best form of anonymous payment right now is cash. Fiat cash is the best form. Because especially once those dollars have passed a couple of hands, they are unmarked bills now that have been collected through various number of criminal activity. They're put on a big pallet, sent over to some drug dealer, and has a warehouse full of pallets of US dollars. Completely anonymous. No one knows they're there unless you walk through the door of the warehouse and see them. There's no digital explanation that they are there. The number one way of doing drug dealing or terrorism right now and to fund it is US dollars. Bitcoin seems to get the heat for that, even though we actually put every transaction on a blockchain. You would actually know if certain individuals are sending Bitcoin to an address. You could actually trace that right now. So yeah, so that's our definition of what sound money is. It's and the huge one is scarcity. Mm-hmm. And if something is not scarce, then it cannot have value. It should not. The only thing that is keeping the US dollar up is the first one, which is just history and people's confidence in it. So because it's been the dominant currency for the last 50 years, people believe it's strong. The second people take their money out of the banks and stop using it and convert to a different currency, it collapses. Because the other things that those guys listed in the abstract about unit of account, mean nothing. That does not mean your sound money. It is ultimately the confidence in the money that gives it value. The second confidence goes, the unit of account goes, the payment method is destroyed, and all three metrics can just fall over in one go. Whereas when the measurements that I gave you, once the confidence of Bitcoin, let's just say Bitcoin, the confidence of Bitcoin falls, right? Is it no longer scarce? No, it still is. Is it no longer being able to be transact globally? You can. Oh, is it not censorship resistant anymore? No, it is. See, the values of the money stay. It's just whether Bitcoin won or not. Is it the best? Did it win? Was it differentiated above and beyond all the other monies? And if it is, then Bitcoin wins. If it isn't, then Bitcoin loses. It's the confidence game, and then whether people want to transact using it. Whereas using their methods, that it's built on sand. It's laughably bad. Their definition of money, laughably bad. They should be ashamed to call themselves economists, writing nonsense that bad that I would expect from an 8-year-old child.
But it is interesting, eh? Good breakdown of that. And yeah, one of the things you talk about in that is the scarcity, which is obviously the big deal thing here. And in one of the papers, it actually does mention about the growth path of Bitcoin supply, and it reckons obviously you can predict how many is available based on the halvings, and they say it's going to continue to increase and then decrease by keep decreasing, sorry, until 2040, and then it will remain at an infinity level. So I didn't believe that. So that's maybe potentially incorrect because I was wondering, right, if they what they're saying is it will, because to be fair, it will keep going on forever if you keep halving it, won't it? It's never going to go to zero
Yeah.
reward, is it?
Well, yeah, it goes
Can
to
it go to
zero
a
once
point?
it hits the 21 million supply.
But will it ever reach 21 million supply if you keep halving the reward like every?
Yeah, yeah. But basically, they're kind of right. Once you hit
So I
21,
thought, oh yeah,
when you hit
21 for
2140,
that's
the
why I thought it says
halving.
2040 here.
Well, yeah, they were
So this is the
100. They were right.
100 years
Who
out.
wrote this fucking paper? They were
Well,
100 years off.
yeah, no, it's interesting, and this is what I'm doing with my literature because I realized that it's the year 100 years out. That's my note, and it's interesting because this sort of stuff, and you mentioned yourself about good and bad money. They talk a lot about good and bad money, and they say good money drives out the bad, etc.,
Yeah.
etc. And and this is the difficulty that people will do. So if you want to research Bitcoin, you're not necessarily going to go straight to the Bitcoin standard. You're going to go, you Google it or Google Scholar or do something like that, and you're going to read this sort of stuff, which does sound like one of the other lines is going, it has no intrinsic value similar to fiat because, and that's the confidence game. And I think
Yeah.
I like the way confidence is key on a lot of these. And the other thing, what they've done, they're comparing. A lot of this is done 100% comparisons on value, which I will. I've got some stats coming up in a bit, which will go into that a bit more detail. But if you compare the price of Bitcoin in the last 10 years and then compare it to the last 10 years of the US dollar, of course, volatility, etc., ups, downs, the bubble effect, if you like, can be explained in 2017 and at 2020 quite clearly with the massive peaks and troughs, or 2021, wasn't it?
And
But
let's just they talk about value and volatility. Let's zoom out the 100 years that fiat's been around and have a
mm,
look at the dollar and the pound. They're down 99.7%.
pretty
Yeah,
big. And we only lose 60% each drop.
people are buying houses for £100, but because the value of money has gone down by 99.7%, now the average house costs £300,000.
Mhm.
If people used to get paid a penny for like a week's work, that was a lot.
No,
So
we don't even
all they're
transact in
doing is
pennies.
they're just they're focusing in on a very small section of what fiat is, and ironically, I think this paper was written, yeah, in 2017 or 2018.
Yeah, this was
So
2018, right now.
so
But I have been looking through, and one of my major points is this is being quoted in 2023 papers, right? And this is the trouble because things have moved so quickly in the Bitcoin world, it's out of date, full stop. Because they talk about in one of the later ones I get, they're like quoting from 2017 peaks and troughs, and obviously we knew they were talking big numbers like, oh, it went up to 4 grand and stuff like that. Well, that's that's child's play, isn't it now? Because then
and basically and when in 2017 it was April, so the price of Bitcoin was 2.5 grand.
mm,
So imagine the egg on the face of these economists that said the price of Bitcoin is going to zero. The
well,
price was 2.5 grand, and weirdly, it was on a peak. Like the chart they give us here is goes from zero, has a peak to up to 1,000 in 2013, comes down, and then at the moment it's at 2.5 grand. Oh my God, if they zoomed out a couple of years, it goes to $69,000.
yeah.
And now we have crashed 70% and we're only at $23,000. So my question right at the beginning of this is how many of these are shorted Bitcoin? It's like, well, if they did, they're bankrupt because
Yeah, you did 2 grand.
we never went within 10 times 10x the price they're at now, we haven't been lower than that. That's how wrong they are.
Yeah, yeah.
They're
And
wrong by a factor of 10.
no, you're right. And the reason why I use those two papers initially is because everything I found, because obviously I got sent these from my supervisor who was trying to make a point that they had studied money for 30 years, and it isn't categorically. She basically was as strong as you, but on the other side, I would love to get her on the pod.
I'd love to have her on here as well. If
Yeah,
these are the papers that she got her knowledge
it
from over
is. These are the ones she
30,
sent me. Yeah, she sent me these. So anyway, I've been looking
this is
myself.
her strongest argument, and they are laughably bad
Yeah.
with typos to the point of they think the supply of Bitcoin is infinite, and that the supply of 21 million comes out in 2040, not 2140,
Hmm.
and that they're saying Bitcoin goes to zero, and they said that at 2.5 grand, and she has the balls to send you that whilst the
Yeah.
price is 23 grand, and we're gutted that it's 23.
I know it's funny.
But it's like, read the paper. Like, you wouldn't be doing your silly tutoring lecturing job if you'd have just got not written this paper and just bought Bitcoin. You would be 10x up. You'd probably retired.
No, absolutely. And one of the later papers sort of correspond, and the reason I've also brought those up is she's been part of one of these about what money is, and it basically suggests all this. So she wants me to respond to, and the point is, and I think this one's a bit more of an interesting question: is Bitcoin money or is it a speculative asset? And I do see that. That's a relatively good question for today's market, because I would argue, and there's a few reasons why this can be sort of a bit more tolerable of an argument. The people that do the mining, and the evidence is in the last paper I sent you, about most miners will get the reward and then convert it straight out. So it's suggestive of
No.
a and then the other thing is they talk about passive and active investors, and a lot of people buy it and hold it. So which is obviously like what we say to do. So they're saying they're not spending it. They're doing like two transactions. So they buy it, send it. Well, in this interesting, actually
Hold
quite
on. And
clever.
so people have wages, right? They get accept the money in pounds and dollars, but people shove it into pensions and Vanguard accounts.
Oh, it's the same thing. Oh yeah. No, well, my point back to it is they're holding it because they know value goes up. So it's worth holding your little nest egg for, opposed, which is arguably a speculative asset then, isn't it? It falls into that bracket.
Yeah, yeah. And
Because
I
you
don't
put
know.
your money,
Don't know if she thinks that's an insult or not. But essentially, all money is both. It's just like what percent is it?
well,
Because
yeah, why
because
do you put your money into investment ISAs? You do it because you make 2%. You fight inflation with that. Oh, that's the whole point, isn't it? So you pull it in 100 grand in there, it'll make money over the years. So you're not devaluing it ultimately. But you're doing the same with Bitcoin. However, you're making obviously huge markups if you go back in the history charts and hold it for a bit longer. So that's one of their ins. And I can see, is it a speculative asset? It's similar to putting it into Tesla shares and stuff.
that doesn't change anything, does it? Because
It doesn't.
the
No.
US dollar is a speculative asset as well. People trade dollars into yen, into euros, into pounds every day.
Hmm.
That's the whole money markets. That's what Forex is, foreign exchange. So because it's used as a speculative asset as well as money, it's, if anything, it just gives it a firmer grounding, because before, at the moment, we don't have a single form of money. We have lots of different fiat currencies, and every day people are trading them. America have a bad day, they might be going to war with someone, their currency will go down. People bet on that, and they'll buy yen because China are doing well, or they'll buy the Russian ruble, whichever, and they're switching in and out of all these currencies. So of course, we're going to have a load of traders doing the same with Bitcoin. But the majority of people that call ourselves Bitcoiners, we do not trade it. We do hold it because we believe it's the new form of money that's going to take over the world, and it's going to, literally, the price against dollars and pounds is going to go to infinity. So of course we are holding it. It is not in our interests to be selling that asset. We're trying to live as minimal lifestyle as we can to maintain as much Bitcoin as we can. But just because we're not spending it doesn't mean it isn't money. It just means at the moment it's more convenient to use fiat. Fiat's also not as sound money. So if you do have it, it's good to get rid of it quick. Whereas your Bitcoin is precious. So, and then, and obviously, they're probably not going to want to listen to it, but obviously the evolution of gold into money went through this exact same cycle. The first people that started using gold as money, they hoarded it. They started to use it as a currency in their small little ecosystem, just as Bitcoiners do. Go to a Bitcoin conference, you can spend Bitcoin. With the small towns and cities that first started using gold, they used gold as their currency. They had gold coins. But what were the majority of people doing it? They were digging it out of the ground and hoarding it. They were filling their banks and their safes full of gold. And then eventually the rest of the world caught up. And once the world did catch up, the people that had hoarded the gold ruled the world.
Hmm.
So if we use that as a model, which is the last form of sound money that has existed, at the moment, Bitcoin is 14 years in, following exactly the same model. It took gold about 50 years to get to reach a decent global penetration, where the majority of the world use gold instead of their rye stones, agri beads and stuff like that. Whereas we think it will happen quicker with Bitcoin because back then, the what form of money people used had to spread by word of mouth. There was
Mm.
no internet, no newspapers. So it was very slow. So it took 50 years for people to even catch on that gold was a thing. Whereas people knew about Bitcoin pretty much 3 or 4 years in. But obviously, a lot of people just missed it. But now we're 15 years in, 14 years in. And so it should happen. We're pretty much at that point where I think relatively soon, I think the majority of people are going to go, that's the soundest money. So why are we holding fiat? But it's very easy to criticize the new form of money in its early years where it is speculative. Not a lot of people are spending it. A lot of people are holding it. And then you dismiss it out of hand. It's like, well, you're the same person that would be scratching a little mark on your rye stone, going, this is the best form of money ever. This gold thing, what's that? Never heard of it. And you go, oh, the price of gold's all over the place. You just found another mine full of gold. Now the price of gold dropped by 40% overnight because there's a huge mine. But yeah, we don't know how much gold is in the earth yet. The price is very, very volatile, and it'll take 50 to 100 years for the price to settle. But once it does, it will become very sound money. And that's what happened to gold. And it had a very successful 500 to 1,000 years as money until fiat came along and screwed it all up.
Mhm. Oh yeah, and I think despite these academics talking, they're coming from an uneducated point of view on the benefits of. And if you look at anything, I always say stats and lies are very similar, and you can look at these and you can get draw conclusions. And I think the other thing's uneasy, and I think the confidence thing comes back into this. At the minute, we trust the Bank of England like for ensuring of your your credit and stuff like that. So everything is linked with and is backed by the Bank of England, which is government owned ultimately, isn't it? Well, government funded, if you like, whenever there's trouble. So there's that element, and nobody can see past how society is today. Because that's the other thing as well. It isn't just a new form of money that we're looking at trying to re evolve, or it is evolve and move into the new era. It's society as we see it today will completely change. And how is it going to work? I know we've had pods before and we've discussed like, so if you take out the government owning it, you're risking the fact of, potentially there still will be taxes in there, but potentially then everything becomes more privatized. So then the NHS, the police, and all that sort of thing is no longer backed by government means. However, that isn't necessarily a negative, but if you're looking at it through the eyes of an older person, they can't imagine that. It's all they've ever known. It can't change. If it changes, it's just mental, it's madness. And I think that's where these sort of papers are coming from with those eyes. You can't change the money source because it's not backed by England, Bank of England. So it's impossible. And that was one of her things she said to me. And obviously, she took me quite by surprise by her stance. She didn't even do any niceties. She just ripped my title apart. And it was just interesting. And one of the risks I do see, and I don't know the answer to this, is you talk about global medium of exchange, which absolutely is. You can do it within what? I was doing some transactions into Ledger the other day, and it took about potentially 10 minutes to actually complete the complete, and there was a decent sum of money as well. It was sort of appeared in the ledger, then it would disappear, it would come back, and it hadn't whatever called it completed or whatever it was confirmed, hadn't been confirmed. So
Just use Lightning, it's instant.
yeah, however, you wouldn't use big transactions on that, would you?
No, but if you're doing small payments, I could send $1 to
Oh
Australia
yeah, sorry, yeah, yeah. Oh, sorry, I was just that
for
was
zero fees instantly now. And that guy could be blacklisted for fraud. He could be in prison for multiple murders, like whatever. Like you could have every bank account ever frozen. If he's got a mobile phone in his hand, he could download a Bitcoin wallet, send me the address. I could send him $1 of worth of Bitcoin in seconds.
however. So you just said you needed a mobile phone and you were going to send it across the world. You need a sort of a link into that mobile phone, which is the internet, isn't it, in power?
Yep.
So what happens if that gets turned off? So let's say we're talking, like I go back to the society change would have to happen. So that means there's going to be some rebellion, and you're going to be up against some major players that would be obviously in their best interest to sort of shut supply. We've seen it before. They turned off people's bank accounts. They freeze things. Oh, you've had personal experience of it, and were attacked by that. So what's to stop them from just shutting down the power grid that's supplying the main satellites or whatever? I don't know however 3G, 4G, 5G, Wi-Fi works, but there must be a way of turning that off. And who's owns all the major energy companies is probably quite a link to the government. So if the Wi-Fi went off, there is no plan B there, is there?
Not really, no.
But then
If they
saying
switch
that,
off,
life stops as well, I guess. But
yeah, if they switch the internet and electricity off, the last thing you're going to be worried about is money. It's all going to come down to survival at that point. You're not going to have heat, you're not going to have water, you're not going to have food.
it's the citadel thing, though, isn't it? We always talked about it, like
Yeah,
sustainability. Hence
that's
what
why I'm preparing. I don't expect the transition to be good. I fully because and the thing is that people always ask Bitcoin is like, oh, how do you make the transition smoother? And unfortunately, we're not in control of this. We're just we have the newest form of money, and how people use it is up to them. Unfortunately, the people that wield all the power right now and control everything is government who own fiat and own their infinite supply. So as confidence wanes in their currency, when it starts to fall, it's how do they burn the ship, burn the house before they run out of it, type of thing. They probably will. So when they realize that there's hyperinflation, no one's using the money, it's just people are burning it in the street. Using fiat as fuel for fires, which people might think sounds insane, but it's happened plenty times.
Zimbabwe, isn't it?
Happened in Zimbabwe. It's happened in Germany during the war. It's happening in Venezuela right now. It's happening in Argentina right now.
Yeah.
So it's a matter of time till it happens in the UK and US. So when that happens, it's what do the government do? And unfortunately, track record suggests that governments do go just keep pushing the authoritarian measures on the people to try and maintain control and control of the money. So if they just relinquished it nicely and let Bitcoiners take over the power grid, take over the internet, then things will continue. But unfortunately, they're probably going to try and hold on to it themselves and then use it as a weapon against the people to say, you are collapsing our currency by using Bitcoin. You need to stop and use this. It's your fault. This is where always, Bitcoin will be blamed in the end. It will be dismissed as not money and worthless. But then when we end up taking over, and it'll be, oh, the only reason this failed was because of Bitcoin. Whereas obviously the analogy we always use is the Titanic and we're the life raft. The Titanic is going down. It's not because of the life raft. The life raft did nothing, right? The Titanic went down on its own. It hit a big iceberg, which in this analogy is inflation. So it inflated itself beyond reasonable measure. It is sinking. So we either all go down with the ship or hopefully someone brought a life raft. And fortunately, Satoshi Nakamoto built us a life raft that everyone can get on and sail away. Now, what we sail to, what version of the world we sail to, we don't know. But do you want to be on the life raft? You're going to go down with the ship and have to live in that new world with no money, or do you want to live in the new world with some money? They're the decisions, and we don't know what world gets built post fiat. What industries are privatized? Which ones are public? Are the governments? Are the big governments? Are the small governments? Are the medium governments? We don't fucking know. It's way too many factors to consider, and there's not many Bitcoiners that would even claim to have a fucking clue what is going to happen. But what we do know, with a very good level of certainty, is that fiat is going to zero, and it's going to zero soon. So what you do about that is up to you.
Yeah, and you know about the whole blockchain marking each transaction. Admittedly, it's kind of anonymous, isn't it? Unless you know the massive um, wallet ID or any of that malark, which is nigh on impossible to link to someone unless you literally because it'd be hard to even know your own on the blockchain, wouldn't it?
And you
Um,
can. It depends if you KYC'd it in an exchange.
okay. Oh,
For
so
every, so let's just say you on Coinbase and you send your money from Coinbase to a wallet. That wallet is out of Coinbase, but they know that's you.
yeah, okay. So moving on to my next point on that, if you were to mine it, so obviously we were discussing today on the back of the 4Bs pod about the heater that's a miner. So basically, it's a little miner, and the energy it gives off, instead of just having it wasted as noise or heat coming out, they convert it into an actual heating device like the Dyson heater. And it's an air purifier, I think. And also in the summer, I think it somehow cools the air or something like that, which is quite insane. But it's using the energy that you're pumping in to do the mining transactions and all that to actually produce a usable energy. So it's recycling what you're spending on it. And in return, you may make some money. So my question was, I think you asked the question, I want to know your thoughts on it after saying it. If I was to mine using one of those machines and I mined some block rewards, would that be then able to be transferred directly into my ledger? So that it technically then would be dirty money, wouldn't it? In the sense of it's not KYC'd because it's come from my little mining heater and then I've linked that via my app, unless my app has to have a KYC into it.
Yeah.
But I don't see the benefit to KYC in it because it's not linked to a bank. So all I would do is you would have it downloaded into a wallet, which is on it's basically an online wallet, and then you ping it across into your ledger. So then you would have unidentifiable money, wouldn't you?
Yeah.
Which is,
Chances are it will have some form of KYC on it. Every financial institution has to. The only reason why Bitcoin doesn't is because by creating a Bitcoin wallet that enables you to interact with the blockchain, you are not a financial institution. So
oh, okay.
you're just engaging with a database, and it happens to be that the noughts and ones that are moving around are Bitcoin related. So that's why Bitcoin wallets are great. And it's why really the truly only non-KYC Bitcoin you can get is by mining it yourself. But you probably need to buy a proper Bitcoin miner. I'd imagine these more commercial ones that also do other things because they're proper companies and stuff. Like if they don't require KYC now, they will in the future. Whereas when you buy just a bit of hardware, it's barely even called a Bitcoin miner. It's called like an ASIC. It's just a computer, a series of chips with a fan and a power system that happens to be very, very efficient at mining Bitcoin. But you could use that little machine for anything. You could use it for browsing Facebook.
Okay.
It's just not optimized to do that. It's optimized to do one very specific thing, which is mine Bitcoin. So that's why those machines can be sold with no KYC on them because you go, well, do you KYC every laptop you send out? No. So why are you doing it to ours? So they got around it through that. And once you
I
have a
see.
miner, you can mine some Bitcoin and yeah, it can be anonymous. But anyway, that's nothing to do with the academic papers anyway.
Yeah.
Was it?
No, no, it was, but one of the things that they talk about in it is security, and that's why I talk about mining because I want to introduce that because I've sent you those stats as well. That I've got some Bitcoin stats which are quite interesting to discuss, and one is hash rate, which is obviously the amount of miners, and one would argue that when the price goes down, it becomes less rewarding for um miners to actually do and put their energy in because they're going to achieve less. And obviously, the more miners there are, the less likely you are to make, you know, to win that reward, the reward. However, if you look over the hash rate between when the papers were gone, which was between 2016 and like for ease of the numbers on the graph of 2020, it went from like probably at 2018, it was probably sat at God, like 4 or 5 thousand.
Hmm.
Then now we're sat at 65,000.
Yeah, and this is why I say like price is not a reliable measure because with
No.
price, there's a lot of people that don't have a lot of skin in the game with Bitcoin. You know, they're very rich, they're very wealthy. You know, they might
Mhm.
have billions and billions, and they might put a billion into Bitcoin, then just sell it one day, and that would tank the price. Yeah, because they have Bitcoin's still a relatively small market, and some billionaire dumping a billion or two worth of Bitcoin can slam the price down 20, 30%, and everyone's like suddenly searching around with, oh, why has Bitcoin gone down by so much? In reality, it's some rich guy wanted to buy a bigger yacht and he sold some random stuff that he had. He probably sold 5 billion of Microsoft stock, 7 million of Apple stock, and 3 billion of Bitcoin. Like, he didn't even know. Yeah, and he was just moving stuff around, right? Yeah, everyone will be suddenly digging around going, oh, Bitcoin's failed. And in reality, it's one billionaire wants a bigger boat. Whereas with hash rate, it's very different. Hash rate is people that understand Bitcoin, buying miners, plugging them in and powering them, and spending millions in energy and miners to mine Bitcoin. These are the people with real skin in the game. And if you look at the chart, what I'm looking at right now, it's on blockchain.com, whereas the price is alongside it, which is very volatile, I would agree. But if you look at the price or the amount of hash rate that exists, it's just up and to the right. There are some dips along the way, but by and large, you can just
That's
draw a
when
straight.
that's when China and stuff banned mining, didn't it? That's probably where that dip is. Because I was trying to work out that anomaly, like in between what it was like 2021-ish, that big.
That's when, yeah, exactly. That is when China banned
And
Bitcoin and
unfortunately,
banned
that fell off
Bitcoin.
at the same time as the price dipped. So it would look like it was price related instead of
And
actually other
to a certain
reasons.
degree, like it is, like you said, when the price goes down, some Bitcoin mining um, companies go under, because they're not very profitable, their margins are tight. So if the price drops by the lowest by below a certain mark, then they're now not profitable and they close down. But that's Bitcoin hardening its miners, right? And plenty of miners over the history of Bitcoin have gone bust. But that's because they had inefficient miners and too expensive energy that they were powering it with. But ultimately, the amount of hash rate, the amount of miners mining Bitcoin, it's at all-time highs right now. So that is, whenever we talk about metrics and whenever I see these academic papers, and when they focus purely on price, which can be, especially well, we live in a world where literally fear is infinite. So we could get a bad actor that has unlimited access to fiat, buy a load of Bitcoin, and then just dump it. And they could dump the price. They can do so many things. So the price of Bitcoin can be manipulated. However, the hash rate is very hard to manipulate because how do you get these miners to switch off their miners? You can't really. You can't switch on miners, and I suppose it's just tougher. They could, if they really wanted to, they could actually buy a load of big mining farms and then just switch them all off and go, see, hash rate went down. But that's really hard.
Yeah,
It's
that's
much
true.
easier just to buy some Bitcoin whilst it's cheap, wait for the price to go up a bit, and then just dump it all in one day and slam the price back down and go see the price of Bitcoin's too volatile. So yeah, because you morons keep buying a billion one Tuesday and selling the next Tuesday, you're making the price volatile. Because most Bitcoin is just holding underneath. Yeah, it's the tiny couple of percent at the top that's being traded, which is where all the price movement happens. So yeah, if any of these academic papers don't include hash rate as one of their metrics, then I think they're either incompetent or being disingenuous. Because they're either incompetent because they don't know what hash rate is, or they're being disingenuous because they do know what it is, but it doesn't fit their narrative, so they don't include it.
Well, I think it's disingenuous, but I by accident in a way. They're just trying to rule it out because they're considering it as crypto opposed to Bitcoin, and they're not looking underneath the surface. And one of the things I did read, because I've gone through lots of these, one of the big things that someone's picked up on again in previous years is security and the security about the coding and stuff like that. And if there's not many, but however, nodes and network difficulty is absolutely that security matrix that or metric that stops any sort of viruses, Trojans, whatever you want to call them, of influencing the code to get rid of one of the values of money, which we've just said is scarcity, by changing any code.
Yeah.
So one of them as well, and I find it quite an interesting code. So I've used blockchain.com as well, and I got the difficulty network difficulty rating, right? And it is interesting all the way through from sort of again, it was next to nothing up until 2018. Then it starts to increase quite nicely, but nowhere near like in line with the value of the money. And then as the price has gone down, the network difficulty's gone up through the roof. Or is online on par with the hash rate. So it just shows the difficulty hasn't really got any easier at any one point. So that's the length of the code that has to be
Yeah.
got every 10 minutes, isn't it?
You know
All
where
right.
that is, though, don't you? Right? That's by design.
Yes, it's by design to make it each block be done within 10 minutes, isn't it? Or around about 10 minutes to keep in
Yeah,
line with the
yeah. So
halving, isn't
Toshi
it?
doesn't want it to be any more or less than around 10 minutes.
Yeah.
So
So
if
that
it
ups
gets
and
done
downs depending
faster,
on
it
hash
gets.
rate.
Yeah.
Yeah. But the point is, though, you can't hack it if I imagine it's 70,000 difficulty, yeah, with that many miners, that's going to be a hell of a code to crack, isn't it? For any, so it just
Well,
shows you that the security levels increasing massively over time, which is the critical part. And I think I've got all my graphs gone back to day zero to give a true reflection. And then just one other thing, just from a stats point of view, I want to talk about is we've been going at the point of last week, it was 4,635 days of Bitcoin's life. 4,113 days of those were profitable by 88% or more. Not every day, obviously, but over the time. There was only 525 days that have been unprofitable. Unfortunately, they're since our last pod. So, well,
okay.
so some round obviously since the big massive spike of 60 odd
Yes,
grand.
because we're just before the next bull market, aren't we? Yeah.
Yeah. So that's just really interesting. So when it goes up again, the unprofitable days again will go down
You know,
from all-time highs we're talking, obviously.
but that's the same. Like any investor will know that time in the market beats time in the market. So that's the same with the stock market. I think it was something crazy, right? Something like 80% of the gains that have happened in the stock market over the last 50 years happened on like 5 days. So if you weren't in the market on those 5 days, you missed out on the majority of the gains in the stock market.
Mm.
The stock market tends to go up by up to 2%, down 2%, up 2%, down 2%, right? Day to day. That's what it tends to do. And occasionally it'll just rip 20, 30%. And if you're not in the market those days because you're trading, then you miss it. So that tends to be the same, with Bitcoin. But of
But
course, like you can cherry pick at any point, can't you? And it's just depending on where you're picking it at the bottom of a bull market, the top of a bull market, at the bottom of a bear market, you can make your own conclusion. So it's obviously a good
well,
time to write a paper on Bitcoin because we're 60, 70% down.
I think the good part about this that what I just talked about the graph and put it in the show notes because you've got that. If you drew a line from day zero, like you know what you were saying about the peaks and troughs in stocks and shares, like you look at GameStop and stuff like that, that went up massively, but they came back down. These guys here have literally, if you look at the line of best fit, it is continually up,
Yeah.
even though it's had some massive peaks. Obviously, the little peak, it was only for a number of days, it went up to 60 grand. It was like probably less than a week, wasn't it? So it's only those days and then after we're not far off. So once we get over 61 again, there'll be 0 days of unprofitableness, which I think is the critical bit. Again, it's zooming out, isn't it? So we talk a lot about price, but they're covering it on these papers over a 3 year span, just before or with the massive bull market right in the middle with the bear market. So instead of going the 3 years that are like the lull between, so I might do that. And what I'm going to do to prove this is I'm going to do a cluster analysis with like the US dollar. That's what I've been asked to try and run. And it's probably going to show it's a speculative asset. However, if I can do the cluster analysis with CPI or with inflation, the effects on the US dollar, I think a different answer is going to come out.
Well, I would answer that question with it absolutely is a speculative asset, and it's a speculative asset that has gone up only.
Yeah,
Why do you not want your money to do that? Because
yeah,
and in reality, Bitcoin, this is the thing as well, like Bitcoin actually hasn't changed price necessarily. Like, my argument always would be one Bitcoin's been one Bitcoin.
mhm.
The only thing that's happened is that fiat has lost value.
Well,
Bitcoin
yeah, that's
didn't,
the way of looking at it, isn't it? It's Bitcoin value against the US dollar
yeah,
opposed to how much is Bitcoin worth. It's just that if anything, you compete them, it wins massively, doesn't it, on
yeah,
price?
exactly. It's just
It's
because that's
smashed
the
out of the
thing.
park.
It's almost like how much, because you could almost go, well, petrol is a speculative asset, like a strawberry is a speculative asset because it's gone up loads in price. Oh, great. No, no, petrol didn't go up, strawberries didn't go up, didn't become more valuable. Your currency became less valuable, so you
Mm.
needed to spend more of it to get the same thing. That's in reality what's happening with Bitcoin as well. Bitcoin's the same thing. You just need more dollars now and more pounds to buy the same amount of Bitcoin. It's it's always like the metric of like, oh, Bitcoin volatility. You go, well, a lot of the volatility is actually coming from the fiat side. The fiat is bouncing all over the place every single time a bank crashes and
Well, that's the critical
lockdown
part, isn't it?
happens. They print another trillion to do this or that. The price is dumping by 10-20%. So of course it pumps Bitcoin 10-20% on the other side. Why the hell would you want to hold that piece of shit? Of course people are converting that money into Bitcoin. And then Bitcoin goes up by loads and suddenly that's now a negative. It's then one thing I do is embrace the speculative asset thing because of course we are that we're not money yet. We're not the global accepted
Currency.
currency of the globe, but we are on that path. So on that path, people speculate on the price and they can make money on the ups and downs. If you can guess right, fair play. Buy and sell Bitcoin if that's what you want to do. I wouldn't because like I just said with the stock market, over like 5-15 days, that's what all the gains were made. So if you're out of Bitcoin on those 5 or 15 days, then you lose all the gains. So I would just buy and hold. If you want to speculate on it, absolutely do that whilst we establish where we are going to be sitting price wise. But the dollar and the pounds aren't really going to exist. And it's very hard to compare yourself. It's like trying to compare yourself to the Venezuela dollar and the Zimbabwe dollar. You go,
Hmm.
well, like, what's the price of Bitcoin compared to that? It's like, well, it's changing every single second, right? By a 10x either way. And you go, oh, Bitcoin's too volatile. It's like, no, Bitcoin's staying the same. It's the Zimbabwe dollar that's moving all over the place. And that's
Fair
what's going
point.
to happen with the dollar. It's going to be, oh, we can't value Bitcoin in dollars now. So we're going to end up moving to sats being the standard, and we're going to denominate everything in sats. And it's going to be tough to begin with, but eventually it will settle down once we realize, well, how much is a loaf of bread in sats? How much is a house in sats? How much is a car in satoshis? And then once we figure all that out, it will stabilize, and hopefully that will be the price of pretty much everything forever. The price of a loaf of bread, let's just say it's 1,000 satoshis in 50 or 100 years' time, the price of a loaf of bread will still be 1,000 satoshis. There won't be inflation. Everyone will know the price of things. And
Yeah,
that isn't that nice? If 50 years ago, how much was the price of a loaf of bread? I don't know. In 50 years' time, how much is a loaf of bread in pounds?
a lot.
I could probably just guess and go, oh, let's say a loaf of bread's £2 now. It's probably going to be a tenner in 50 years. Well, why? That doesn't make any sense. It should just be the same. And on a Bitcoin standard, it will. Because the
Yeah,
supply isn't constantly increasing, so we don't have to keep increasing how much money we spend to counteract the fact that it's lost value.
yeah, and your initial conclusion of it being a speculative asset does play true because the if you went into shops that only transacted in Bitcoin, the prices would have to be all digital and they'd have to be fluctuating with the currency at the time because obviously you know how quickly these sort of things can move up. Like we sit here sometimes with your Bitcoin clock behind you and it goes up like $1,000 in an hour.
We do
That's
realize that's even Audi have implemented digital pricing now because the pound is fluctuating and the price of goods is fluctuating so fast they can't change the prices on their shelves quick enough. They've switched to digital pricing on their shelves.
that's interesting. I
So
didn't
you
know that.
say that that's what you need for Bitcoin, which at the moment I'd agree, but they're having to do that for pounds right now. The
Wow.
pounds are devaluing so fast and the price of goods is changing so quickly.
Still want
They
to put them
can't
out.
risk in the time it takes them to price up a load of goods. They've lost 20p on 100 items because they couldn't get out there to reprice it fast enough. They had to I had to honor the last price. They do it digitally now from head office and just send it all through because they were losing too much money by waiting for people to price it up.
That's interesting because what they'll say is the reason for that will be like be a global warming effort or something like that when it less paper. Almost guarantee.
No, I think they have been honest on that one. I think they have said they struggle because
That's
it's
interesting.
they're struggling with the changing of pricing by so much. It's so variable. They're having to do it digitally, and that's in fiat, and it's only going to get worse. Yeah.
Well,
Anyway, have you got any other points around these academic papers?
no. They're basically the main ones I pulled out, and it was the headlines that I was going to use. There's obviously quite a few more, but it seems like there's quite a lot of negative ones, but they're old, and then the ones that are in support are a bit newer. So I think the critical part is using the right bits to measure if it's sound or not. And just going back what we said is about like the hash rate is the critical part, isn't it? Because if you were to get rid of all miners, then it does slow down or it does stop, doesn't it? Ultimately, everything that is great about it being decentralized, etc., disappears if you end up having only a handful of miners. But it clearly shows that ain't happening anytime soon.
No, we're all
And
time high. It's
yeah, all time
every,
high of
every
that.
every
But that's
metric that is important around Bitcoin is so bullish, and every metric you look at it fiat is bearish, which I don't know how anyone with a critical mind that is writing an academic paper comparing fiat against Bitcoin can write it to a point where they are so negative towards Bitcoin. I get that you don't need to be as positive as people like me that think it is going to overcome the huge hurdles it can, because there is a huge because what I'm gambling on essentially is that it is the confidence and the belief system that the masses will embrace Bitcoin and see its qualities and go forward. There's a huge hurdle there. Now, I think it will just be overcome because sound money always wins. But there's a million outcomes that isn't the end result. So that's my area of doubt. But when I read these guys' papers, not only do they not even acknowledge that belief or confidence in money is a thing, they value Bitcoin on the wrong metrics and seem to be so 100% certain that Bitcoin will fail, but for completely unfounded reasons, and don't really acknowledge the frailties of fiat. So I would just love to read an academic paper that actually understands fiat, understands the history of money, and understands Bitcoin, but still thinks Bitcoin will fail. I would love to read that paper, but at the moment, it's just
well, my paper's going to be exactly that, and it's going to be responding to a lot of this, and that's the way I'm going to piece it
we're
together.
going to end up with Bitcoin's going to fail.
No, respond to it. So I won't, yeah, so it won't be. But I think
But
you
that's the
can
thing.
prove.
I like all I was saying is that I'd like to read a paper that is negative on Bitcoin, but I want them to have the sound foundation of fiat and Bitcoin first, and then still summarize at the end why Bitcoin will fail.
I see what you're saying. Yeah, yeah.
Because there is an argument for that, right? There's plenty of reasons, but I'd like to see the theory and like the game theory work through of how like what wins if Bitcoin doesn't, does fiat survive somehow? Okay, how? Right? And why does Bitcoin not become adopted by the masses? And what are your reasons for that? Instead of just dismissing it and going, oh, price volatility, it's not a universe account, blah, blah. It's like, well, that
Well,
it's
what
not
do they even
a
mean? You have to define them metrics as well, didn't we? Whereas the ones you labelled were pretty obvious. The one thing that I did want to talk about before as well, before we leave, is market cap. Um, at what point do we need to get to with market cap to be a true player? you think, before it gets real? I think it's going to be around 3 to 4 trill. I don't know why I think that. I just think that is a decent sized chunk of the capital
Hmm.
market caps that would actually start to have whittled down a bit of the top from is it 13 trillion, the top, or has
No,
made that up?
no. So we're at half a trillion now.
Half a trillion.
No, we're at half a trillion now.
Oh yeah, sorry, yeah, Bitcoin is, yeah, yeah.
That's Bitcoin's market cap today. And we used to be worth over 1 trillion at the market top. Now, I think gold market cap is around 11 trillion, 10 to 11 trillion. So I would say that's probably the biggie, right? Because once you get past that, next stop is the US dollar.
And what's that?
So,
Do you know that off the top of your head?
well, it's infinite and it's just bollocks. Like, who knows what the
Oh, of course, yeah, 'cause you
like,
need no supply.
how many US dollars there are? Like, because the
You need
thing is,
no supply when you.
we're denominating market cap in dollars, aren't we? And
That's
dollars are
right.
infinite, so they have infinite market cap. But and who knows how many they've printed? It's tens and tens, if not hundreds of trillions. It's just whatever they've decided that day, right? Whereas so everything else is nominated against that. So gold is around 11 trillion, I think, and I think there's a lot of people in that hold gold that understand the frailties of fiat and they're holding gold for those reasons. And they see Bitcoin as the new pretender and they're not quite convinced and they think it's a bit still magic internet money. I think once we go from half a trillion to 10 trillion, I'm pretty sure the gold holders will go, oh shit, yeah, we were wrong. Let's get into Bitcoin now. So they'll probably buy Bitcoin at two, three, $400,000 per coin. And then that'll be it. Once we hit 10 trillion, the gold bugs are going to come in. And that's when it's just a rocket ship, really. And it's a matter of time to the masses just suddenly start clamoring in. So I'd say it's probably a 20x from where we are
And
in price and
and
market
then
cap.
and then because I've been looking at price, I found a prediction or a forecast because that's something I'm going to have to do is forecast the future of a number of these elements to then try and get it compared to the future and try and work out when will it maybe change from speculative to money. That's what I want to try and do. And I've looked at the pricing sort of predictions, and you're talking I think it's like half a mil at 2040, I think it is, in the prediction of the scale. So it goes to, I think by 2030, I think it goes to like just under 200 grand. This is all in dollars. So it shows that, but I don't believe that. I think it's going to be quicker. I think once the ship takes off, I think it will be quicker. But the critical part will be every year it puts a price which is going incrementally higher, whereas in reality, we know that isn't the way that Bitcoin works. It will have its massive peak most likely. I know we've talked about previously super cycles, and is this the next super cycle? Like, I do think things are evolving, things are changing. So eventually, I think the volatility will drop to an extent, and instead of it going up and down so dramatically, it will just start to have a bit more of a steadily ups and downs, but only a small percentage. So it doesn't look like the 70% drops, which is the confidence thing. So I think that'll be the slow mover. If we keep it at 23 grand for a while, people start to see it as it's going up slowly, but it's not having a massive cliffhanger again. I always think of Homer Simpson's head when I look at the charts and you see it going up, dotting around, and it just falls off a cliff again. Oh, that was a lot of hard work for the last 3 weeks, and it's just dropped in 10 minutes. Like, and you
It's
can see
Bart
why
Simpson.
people. Bart Simpson, who did I say Homer? Yeah, of course it's Bart, and they're not Homer. Homer ain't got no hair. Um, but but yeah, and then I think once that gets to the point of it just continue going up but slowly, I think that's where the 2040 theory comes from. It will eventually get to a super cycle, but yeah, it's a very interesting topics, and it's the first time I've really researched into academia on it, and I was quite surprised at the frailties of some of the arguments.
No,
But
I'm not.
unfortunately,
The number one thing that you can think is if someone made the financial decision to stay in academia their entire life, you know they're bad with money because it's one of the worst financial decisions you could make, right? And then what's even worse to that is economists get trained on fiat money. They get the bulk of the learning is Keynes, and it is basically says that governments owning the money and inflating it is good. So they all they learn is propaganda, and unfortunately, it's bollocks. They get taught bollocks, and then when they get confronted with what sound money is, and as we saw in this paper, when they define money, they can't even do it properly because they're defining it on a definition that suits fiat. Of course, it suits fiat because if they do it on what is actually sound money, fiat loses.
Hmm.
So they've changed it to, well, what does everyone use? What does everyone have confidence in? What is really stable? Well, of course it's you because you're the global currency right now. But they're not the definitions. That's not the definition of sound money. What is money right now?
Was two
Suppose if you
definitions.
wanted to define what is the global currency of exchange today,
Hmm.
that's a good metric.
And that's what money is, but sound money is very different to money, isn't it?
Yeah, what is the best form of money? Let's put it up. And Bitcoin wins on those metrics. And then you go, right, all we need, if you fast forward 50 years, can you guarantee that Bitcoin is not going to be number one in that time? And they can't say no to that because they go, well, if you look at the fundamentals of the money, yeah, it's much better than fiat. Why would people use fiat other than confidence in a government? And you go, well, okay, at some point in those 50 years, could confidence in that government fail? How many bank crises do we need? How
Hmm.
many 30, 40, 50, 60% inflation years do we need until people go, you know what? I'm sick of earning all this money and losing it. I think I might earn some money and convert it to Bitcoin. I might take my money out of the bank and put it in Bitcoin. Once that
Well,
starts to happen, then that's the snowball that it's the beginning of the end of fiat. And any academic that goes, that is impossible, the chances of that is zero, is being disingenuous. The percent of it happening is above zero and below 100. Uh,
yeah,
but
no, no.
the problem is like fiat is in big trouble. They can't deny that. That's also the thing when they talk about Bitcoin in these papers. They talk about all the negatives about Bitcoin, but they they seem to just think, okay, if Bitcoin's going to fail, then is your assumption that fiat is as good forever? Does it
Good
have a
for
thousand?
assumption.
Does fiat have 1,000 years left in it in its current form? That's what I'd be asking these people because it's just because they've got to be thinking no. And if they say yes, then I just go, well, what world are you living in? You know, how much is a Mars bar going to be like 4 million for a Mars bar in 1,000 years? Like, do you really think this scales to that level?
Yeah,
It's ridiculous. It just doesn't work that way.
no, no, no. It's yeah, no. It'd be an interesting right. I just need to make it right that I don't trigger them too bad because she's marking it.
They're going to get triggered. Like, people in academics are unfortunately they tend to be quite bright, but they make very bad life decisions, which is why they still work in academics.
Yeah.
They probably work very hard and don't get paid very much. So and they've been wrong so long on Bitcoin as well. So they're super salty. You know, if she wrote one of these papers back in 2017 when Bitcoin was 2K, she's so fucking salty. So of course she doesn't want to hear you go, it's going to 200, 300, $2 million a coin. You go, I could have bought that for 2 grand a coin. I don't want it to go to 2 million. And
That's right. It's quite funny as well. They describe Satoshi Nakamoto as a group of developers that go under the alias of.
yeah, that's fair. We don't know if it's one person or a group. It's fair.
Yeah. But that's half the battle, isn't it? Is not knowing it as well, isn't it? That's one of the beauties of it. But they take it as a negative.
Oh,
See.
right. Yeah. I'd much rather know it's Bill Gates, the
Yeah,
guy
well,
who.
that's it, isn't it? Yeah. Yeah. So you can put a gun to his head. But yeah, that's sweet. Okay, well that's quite a heavy, probably quite a bit detailed pod there. It'll be
Boring
less
as
than
shit.
but yeah, check it. See what the feedback is to this one. People like go back into hibernation, guys. You've changed.
Yeah, that's bollocks, that one. Yeah.
Every second. But you did drink pretty much a bottle of whiskey, I think.
Yeah, I did. Yeah, there's pros and cons. Having to
It
listen to academic papers be read to me, but I get to drink whiskey, so it's fine.
makes it palatable, right?
Yeah.
All right, sweet. Okay. Have a good one, bro. Go back, revise how to do a wedding. Go learn
Yeah.
some vows.
I think I might hire Darius to do my vows.
Darius.
Yeah, he's dead.
He is dead, yeah. Fuck it. Or Chico.